Khaled,
Yes,
thanks for having me on the track today, brother.
This year.
I'm excited
You're
to
welcome.
come around. So, today, this video, I want to discuss why traders fail prop firm challenges, because you are the founder of Funding Pips, one of the largest trading prop firms that has paid out $120 million for traders. And I feel like you have a lot of data when it comes to why traders fail and how they can succeed and actually pass trading challenges.
Simply risk management. It's just like people rush, People rush. They lack the discipline over there to just take to a proper risk parameters. That's it. Statistically, you will have better chances succeeding in something over the long run, over trying with flipping a coin. The more you do that, the better the chances of winning something is gonna be for you, right? So it's just risk management.
What are some things traders must include in their trading plan to be able to increase their chances at winning a challenge?
We need to have a strict risk parameters over there. Okay, I'm risking this amount, this percentage per trade, that's it. Which session, Are you trading New York, London, Asia? You need to identify that as well. The pair you're trading to, are you trading gold, are you trading euro dollar, are you trading Bitcoin? Whatever pair you're familiar with, and the setup too, because you're trying to pass your challenge or your evaluation, so you really need to focus on an A+ setup over there, because the longer it's gonna take you, the more the frustration levels are going to be increasing.
I guess my follow-up question to that is, how can traders verify that their trading plan is going to be reliable enough for the challenge?
Backtesting. So everything is based on data, on statistics too, right? Whenever you start something, you need to start building a sample. And based on that, you'll know, okay, how reliable my trading plan is, how reliable my strategy, my system is. What are the chances, what are the opportunities over there, what are the possibilities for this to succeed? So out of 20 trades, how many winning trades do I have? And through backtesting too, you'll also verify, okay, the timing of the trades, the pair you're comfortable with, how does the market behave during certain hours? Are you more of a volume guy or not?
I know you have a lot of data on traders. You said you have around 300,000 monthly active traders using your platform. Is there any, trading plans that you can describe that you see consistently passing trading challenges on your prop firm?
What we see traders do to constantly secure payouts on the same account and keeping the account for a longer period is much more beneficial than how they pass the accounts. And the way we see it is not actually just a singular system out there that does the job. It's just the consistency of the risk they're taking. So the majority of the traders, we have a couple traders, roughly 20, they've been funded on the same funded account for plus 12 months, and they constantly make 3, 4, maximum 5% a month. Yeah, risking so minimal, keeping that account up, not blowing it. So those are a better example to look at, other than that, how they pass it. Because when it comes to passing, it's a mixture, It's too many different.
Is there any other common pitfalls you see with traders failing?
Overtrading, over-risking. Those are the two major things we see. It's just over-risking, The risk appetite, the risk tolerance, the risk behavior itself is just needs some guidance.
What are your thoughts on trading psychology? It's a thing that people say, oh, it's overhyped, oh, it's super important. How important is trading psychology when it comes to prop firm trading?
Psychology is important, not just in trading, in everything. It's just most people often do underestimate mental health and psychology, and they don't understand what psychology is. Psychology is not going to psychologists and telling you what to do. It's just helping you out, understand who the fuck are you as a person.
And just like you said too, when it comes to rewards, right? 5% reward for these prop firm traders that are successful on your platform. Just so when it comes to yourself, getting 1% better every day is all you really need,
Literally.
It's not about getting 20% or 30% and then stopping. It's just 1% better every day.
Consistency and intensity, they always win. You want magnified results, you want proper good results. You need to be consistently intense with what you do. Yeah, you burn out. No, you don't want. You'll get tired, but you get used to it. Your tolerance levels are going to be increasing, your endurance is going to be increasing, your stamina is going to be increasing.
So how successful do traders usually get when defining their entry, exit, and trading management in their plan?
So if you look at the sample, let's say, of 100 traders, the chances of a trader getting all of these accurately correct is below 1%. Again, it takes lots of mindfulness takes lots of awareness. But out of a larger sample, you'll have some traders. I'm telling you, like, there are just handful of traders that they exactly knowing what they're doing and constantly profitable over a span of 12 months. And that's an achievement. That's on its own, it's an achievement. And these traders, we've noticed they're not so fixated, they're dynamic traders. You know, we call them behavioral traders.
And can you go into more of what dynamic means?
You know what dynamic means? So while you're developing as a person, as a whatever in your career, you know, for a fact, there is no plan that goes so linear. There's ups and downs in there. There's so many different factors impact whatever is happening, right? So the dynamic trading is literally your ability to adapt to the market conditions. So you might have you have a perfect entry, selling whatever. Perfect entry, your risk to reward is like 1 to 10. And then the market is moving in your direction, it's 1 to 3. How are you dealing with that? So these are dynamic traders. Some you'll find them, okay, as part of their plan is they will be cashing out 50%, securing some profit, moving to break even whatsoever. It's just like the managerial skills of the trade itself. How you're managing that trade, how you're managing the profit, how you're managing the house money you made out of that.
So Khaled, we're in the Funding Pips office. This place is amazing. You tapped on a subject about overtrading. That's a common pitfall of trading prop firms. Thank you. Now, based on your experience, what are habits that traders can implement in their routine to stop overtrading?
There is no specific habit to do that, but I can give you a real life example of athletes. You know, boxers, for example, they have training camp 99% of the year to fight one single night, 30 minutes roughly of a night, right? Same goes to trading too. There is no single habit that you can apply in there. What you can do is an overall push in the correct direction, which is instead of you spending most of your day trying to execute a trade, no, spend most of your day back testing. So instead, like you're sitting on the chart for 5-6 hours trying to execute trades. No need to trade. Spend 5 hours back testing. You'll execute trades there, but it's just back testing, you know? You're training. And then you're gonna trade for 30, 40 an hour, 30 minutes, 40 minutes, or an hour. And the best way to avoid over trading is sticking to a session where you strictly trade during such hours. That's it. So let's say you trade New York Open, You're gonna pull up at 8 a.m., get the pre-New York, start trading. And you're gonna have, okay, I have these 2 hours window for me to trade. That's it. And then the more you put limits and restrictions for yourself, the better it's going to be. But let's say like, okay, you're a scalper or a day trader, 1 to 2, 3 trades maximum. That's enough. No matter what the outcome is. 2 break evens, 1 win, 3 losses, doesn't matter, stop. Stop, go do something else. You know, you need hobbies in your life, you need a life. You need to be doing something else other than trading. Else, why did you start trading? Because if it's just like financial freedom, that's just like a supermarket talk, as we say, like us Arabs, you know. It's something you buy from a fucking supermarket, you know.
Yeah.
It's nonsense, you know.
And I'm assuming too, if you take a bunch of trades per day, right, over trading, that's gonna lead to revenge trading, especially if you start losing. You're
gonna lead into frustration. Frustration will get you into too many different emotions. You know, anger, then you're gonna victimize yourself. Why is this happening to me? Then you're gonna hate yourself, hate the market, and they start just like over trading, revenge trading, and it's a whole loop.
So many traders face tough drawdowns when attempting funded challenges. I guess, what's your advice to overcoming significant losses?
Why is the drawdown stressing you out? Because you freaking risking something you cannot afford to lose. Before even getting out of a drawdown, you need to figure out why the fuck you're in that position. Why are you in that situation? Because if you don't understand the problem you're in, how the fuck are you gonna find a solution? As simple as that. So I start from there. Figure out why the fuck you ended up there. Then you're gonna tell me I overtraded, I overrisked. Okay, why did you do that? You're not a kid. You're a grown-up man, a grown-up woman. You're responsible for your own actions.
And when a trader is in a drawdown, should they adjust their trading strategy?
No, don't adjust nothing.
Stick to their plan.
Stick to your shit.
Stick to your plan.
Stick to the same shit that got you on the drawdown and see how that works. If it doesn't work, you go back to your drawing board and you write, I'm a dumb trader. I got myself in this situation because I did 1, 2, 3, 4, 5, 6. And I shouldn't do 1, 2, 3, 4, 5, 6 so I don't end up in this situation again.
So note taking is something super important when it comes to, I guess.
Yeah, it is super serious. Because at the end of the day, you're gonna get bored of yourself and you're gonna be at an intersection. You're going to two different roads, right? The first one is, okay, I'm done with all of this shit. I'm not trading, fuck trading. I'm done with all of that. I'm gonna be a better person. I'm gonna be a better trader. And if you take that route, then you need to adjust. You need to observe. You need to learn the causes of your actions. Where are they coming from? Because most actions, most of the reasons we see people losing is literally psychologically.
Can you recall experience you've been through when you face significant losses?
And in 2019, I had like one of the biggest losses. You know, I was roughly 600 grand.
600 grand down?
Yeah, in one day.
One day?
Yeah.
That's insane. How much were you? That's crazy, okay.
Yeah, literally. And I recovered that. And then I took a break for 5 months. Because it's emotionally draining. You're tensed. Like, you're literally tensed. And the reason I lost this is because I was dumb.
And when it comes to risking when being in a challenge, what is, based on your experience, the ideal amount a trader should risk when attempting challenges?
I believe the ideal percentage is 0.5%. That's decent. And you're gonna have more chances. You know, because the higher your risk, the lower the chances you will have. You need to look at both sides, you know, the good and bad, the loss and win.
And what's your approach to stop loss? Because in a prior episode, someone said when you hit stop loss, it's not the end of your trading journey.
No.
It's just a stop loss.
It's just a stop loss, part of the journey.
Yeah.
Like, I mean, if you run enough math, if you run enough samples, enough data, if you backtest it enough, you will understand, like, I'm not profitable 100% of the time. That makes no sense. If I'm profitable 100% of the time, I'll put $3-4 million in a trading account and just slapping 600 lots, you know, on every trade. It's just, I'm making money. I'm 100% right. No, it's part of the game. Your stop loss is literally just part of the game. You're gonna have winners, you're gonna have losses. You're gonna have break evens, you're gonna have bigger winners, you're gonna have small winners, you're gonna have small losses. Like, your losses, the worst scenario, the worst case scenario for your loss is a stop loss. Because that stop loss there is for a reason. And that's what I'm comfortable with risking.
And that protects you from everything else, overtrading, revenge trading.
Of course.
That.
As long as you believe in that. This is my boundary. This is my stop loss. Stop loss got hit, this is my boundary. Khalas, all right.
Gotcha.
And you know that, okay, then my trade or my setup isn't valid anymore.
All right, guys, that's a wrap for this episode. If you did enjoy it, be sure to hit that like and subscribe button. Every single week, we're exploring the ways to success and beyond. And if there's any topics you want us to cover in the future, be sure to comment below as well. Take care.